Option basics. I'm going to talk about options trading and why you should consider it and the fundamentals of how it works. An option is basically the right to buy a certain number of shares at a certain time period. Okay, now in this example, you have 10 days to buy a certain number of shares at a certain price. That is an option. It's also known as a call option. Here's an example. Suppose a shareholder has 100 shares of Microsoft, MSFT, and it's trading at $27.50. Okay, now that shareholder can issue an options contract to somebody else that gives that person the right to buy those 100 shares at $27.50. And let's say that expires in 15 days. Now, to get that right, this person pays the shareholder 50 cents per share. That's called the premium. All that does is it buys the right to buy the shares at $27.50. So if this were you, you would pay this shareholder $50, which is 50 cents times 100 shares. And that reserves the right for you to buy those shares at that price for 15 days. That is an options contract. Where this gets interesting is option contracts, once they're made, can be traded back and forth between people, just like stocks. And as they do, they can move up and down in value, just like stocks. But now here's where it gets really interesting. Suppose Microsoft is at $27.50 when you enter this contract. You pay $50, which is 50 cents per share, to get that $27.50 price. You don't own the stock or anything, you just own the contract. Now, what if Microsoft goes to $28.50, which is $1 gain? Goes up $1. The option value has now moved up $1 because it's $1 above the agreed upon price. So the contract value has moved up $1. You realize what that means. The option has gained 200%. The option value has gained 200%. Because look what just happened. You got this options contract, right? It cost you $50. It is now worth $150 because it just went up $1 per share in value. Your gain is 200%. $100 and you started with 50, that's a 200% gain. If you own the straight shares, it cost you $2,750. Now those shares are worth $2,850. You've also made $100. Same dollar gain, but this is only a 3.6% gain. Which one would you want? The $50 cost to make $100 or the $2,750 cost to make $100? You see where I'm going here. Options contracts done correctly and done wisely can be magnificent in a portfolio. You see the difference in cost. This gives you the ability to leverage big stock for pennies on the dollar. It's ideal for small accounts. Ideal, which of course is most people. Now, I want to quickly talk about the put option. So far, I've only talked about the call option, which is the right to buy a stock at a certain price for a certain time period. However, the put option, you see, the call option gives you the right to buy those shares, but a put option gives you the right to sell shares at a certain price for a certain period of time. Now, what's interesting about that is that makes everything go backwards. So, in a call option, as the stock goes up in value, the option value goes up as well. In a put option, as the stock falls in price, the option value goes up. You see the difference. The reason why this is so important is because in a crashing market, you could play put options, the right ones of course, and as the market tanks, your portfolio skyrockets. That alone is worth options trading. Now, the two key points I want to bring up is you trade options just like stocks as they go up and down in value. That's the system that we teach. There's a lot of systems out there for options. They get in a lot of fancy, complex systems with spreads and leveraging and this and that and hedging, and we don't get into any of that right here. You trade them just like you would stocks, like you're trading penny stocks. All right? And options also represent the underlying stock. A good options trade occurs when you correctly assess the movement of the underlying stock. You know, how many times I hear people say, Gar, I really like to do options, but I don't know how. I don't know how to pick them, right? I don't know what a good option is. I go, no. You have to learn how to trade stocks, because the option just simply represents the stock. So in the study of options trading, you got to figure out which stocks are going to make the good move, not which options are going to make a good move. So, in summary, this whole method is ideal for small accounts. It's perfect. Fantastic gains are possible. This provides you know what you're doing, and that's also why we give you full training on these products, so you know what you're doing. And this means you trade real stocks, but for pennies to the dollar. This is far superior to other methods with small accounts like penny stocks, etc., etc. This is the way to go. Now, be sure to watch the other video, which is the optionality software itself. We go over the quick guide of how you use that, how you can make it work for you. Thank you for watching.